Yes, I think that it seems to me, based on recent rhetoric from multiple central banks, they're beginning to realize that they've burned through way too much credibility, letting inflation get as far as it's gone, rising as far as it has, and yet having done precious, precious little about it. And it seems to me, again, reading between the lines a little bit, that they feel, at least in the short term, and I stress this is a short term idea, they are perhaps now going to try to demonstrate that they may have been asleep at the wheel, but they're wide awake now, and do something to surprise the market, or at least meet hawkish expectations, if not exceed them. And that is a real sea change over the way things have been, operating, the modus operandi, as it were, of central banks over the past decade. So I think that's an interesting one for markets to digest. And what that means is that I think they're going to try to, they're going to be willing to tolerate what has been a surge in bond yields recently and interest rate expectations, and continue to drive that, at least in the short term. And so I would go ahead and continue to position for higher rate rise expectations and higher associated bond yields in the short term, but only in the short term. I don't think they're going to get away with that for very long before they start to cause some rather negative unintended consequences.